Are crude oil prices signaling a recession? They're definitely signaling crude oil bullishness. It's been a hell of a ride higher here. I don't know if you've noticed or not, but it's 30%, more than 30% since June's end. Since the start of July there, we were trading under $70 a barrel. And now have climbed well north of $90 a barrel. And like I say, more than 30% up move here since June. And this has been mostly on supply side dynamics, as we're going to dive in here and try to suss out, again, is this a sign that the economy is marching forward and there's just so much crude oil demand? No, it's actually more on the supply side of the equation, which could potentially be a little bit hairy for the global economy. But first things first is just extreme price action. And now let's dive a little bit deeper into what it all means. And this is, you know, part of the reason why crude oil is such a popularly traded product from the, you know, retail side is, one, it's got this huge historical base of price action. You can look back in terms of the futures from the CME, or if you look at the spot market, or whatever crude oil benchmark you look at, you can look back at decades of data, and it's a market that has, aside from some extremes, traded between, you know, $50 a barrel and $100 a barrel, and has been pretty consistent in that trade, but has seen some huge swings, like we've seen in the course of 3 months here, 30% to the upside. Another reason that it's so popular is that it's really based on supply and demand dynamics. And you might say, well, Frank, every market from, you know, corn to Apple stock is based in supply and demand. Well, with primary commodities like crude oil, it really can be a somewhat simplified equation between supply and demand. And it hasn't necessarily been the demand piece that's been driving this price higher. It's been the supply piece. Saudi Arabia and Russia a couple of weeks ago agreed to extend their supply cuts. And here you have from S&P Global Commodity Insights, the distribution of supply from the OPEC countries here, and Russia included. And you can see that we're at right now a low when you add them all together, going back the last 2 years. And so, you know, if the price is pushing higher, why aren't they pumping out more crude oil to take advantage of that high and maybe bringing in some equilibrium, bringing crude back down to a more normal price of $60, $70 a barrel? Well, this is where we start to get into the problematic piece of this. Not necessarily that crude oil prices being higher is a sign of a well-oiled machine of an economy, but the reason that the prices are moving higher, being on the supply side of things, why are they holding supply, you know, at this reduced level? Well, you'll remember that energy drove inflation higher, and there in that blue line you have energy inflation that got all the way above 25 and even 30% at its highs, and peaked right at the same time as general inflation did in the U.S., and now sparking potential fear again of inflation moving higher, given that crude oil's north of 90 bucks a barrel. But now dive down this rabbit hole with me for just a second. That higher inflation brought about higher interest rates, which did decrease demand for crude oil. We were trading sub $70 crude for a couple of weeks in June, just a few months ago. And so part of the reason that they're not increasing crude oil production, even at these high, lofty prices, is that they're worried that this higher interest rate environment to fight off that inflation will continue to slow down the global economy. They're worried about central banks like the Fed raising interest rates even further. In the Eurozone, they're above 4%. In the UK, they're above 5%. In the US, we're at 5.5% and moving potentially higher. So they're getting ahead of that a little bit. but also noted from some of those OPEC producers for reasons as to why they're not increasing production. They're worried about the slowdown in China that's already been developing and the potential for it to grow in Europe. Here you have in the orange line European large cap stocks that are about 10% off of their highs of July, August range. And then in green there you have Chinese large cap stocks that have, it's been no secret that they've been underperforming as both economies starting to slow down and people worried about whether or not that's going to bleed over into the U.S. economy as well. And so, again, the reason for higher crude oil prices right now being on the supply side of things, why aren't they increasing supply? Why are they keeping it low at these higher prices? Well, they're worried about the potential for a harder landing to inflation. They're worried about those higher interest rates slowing down the global economy. And they're also worried about the slowing global economy that's already occurring in Asia and parts of Europe. And this is, in some ways, yes, a signal of a potential recession here. Obviously, these crude oil producers worried about getting ahead of a potential recession by keeping their production low, because the idea would be, oh, prices are high, we can increase production. But then if the economy continues to slow down into a potential recession, then they cut production again. They're almost just saying, we're going to skip the middleman and not increase production to cut it at some point. But they're also trying to, be not necessarily a prognosticator of a coming recession, but just make sure that they don't see huge price swings to the point where this slowdown increases, the prices fall down to 50, 40 in that range, and then they have to cut here. The last thing that they want is the big price swings that we saw in 07, 08 there, the last time that we saw a huge price rise in crude oil and then a huge fall there of almost $100 from top to bottom. So is this recession coming? We'll see here at least some of the producers of crude oil globally thinking that it is around the corner and trying to get ahead of it by holding production and supply lower.